Hey there, Nick Inman from VolumeProfileTrader.com on Sunday, August 26th. And let's start with the S&P here. Basically held the push down from the sellers, reversed nicely on Friday. Kind of expected just because you do have traders trying to lean on this market. And what happens is on Friday, traders go to close out their position. Or they look to flatten, and the sellers just do nothing but, increase the buying activity once they see the market is reversing. So what happens is they put themselves in a situation where they're just buying the market, trying to cover, and really helping the buyers, the trend followers, really take advantage of the weakness in the market, which was three down days, or I guess you could say three consecutive lower lows, and then on Friday we made another lower low, but completely reversed. Looks like we're trying to push to the upside now. So let's look as far as what we reversed off of, the levels that we need to talk about. Now this 1395 line was drawn before price got to these levels, and the reason why was because you can see it's the bottom of this high volume area. So what happens? Price tries to hold the top of the high volume area. We close strong, and then price continues down. Basically, this is also down to the bottom of the channel, the moving average that we have put up, and we're seeing a nice bounce on good volume off of these levels. Remember, the trend is still higher. We're just getting a pullback here, and we take advantage of it and continue to ride the market higher. Now, what we need to understand is, buying here, let me zoom in back. All right, buying here is not the same thing as buying, these dips down here, which we were doing. We were also fading the rallies at the time, but now it's a lot harder to fade the rallies, obviously, so we will continue to ride the market higher. I would suspect that the market's going to give a try at this 1424.75 level. If we do happen to fail, which is always possible, then you're going to get stopped out of some longs and hopefully some shorts initiate. But I do think the trend's higher. In my opinion, there's too much doubt in this rally, which should spur it. Maybe another 1440, 1450. I'm just throwing a number out there. Just saying, if we do continue to climb this wall of worry, it could push another 20. Let's call it 2% on the S&P. All right, Apple. I chose to reinitiate this position on Friday, and I normally don't enter new positions on Friday, but I did on a couple of underlyings. The great buy was back down at these lows. I completely dropped the ball here, missed it. The market, let me show you so you can see the volume profile. All right, the market pushed back into this high volume area, held it, caught it around these lows here between 610 and 600, and took took Apple all the way up to 660, where I unleashed some at 633 and some around 660. But I bought back in just a decent size position of shares, and what I'm looking for is kind of, let's see if I can get this. You see this little consolidation pattern, call it a bull flag, call it whatever you want. Trend is higher. Give this time. If we start pushing up again, this catches a bid again, this is going to take another trip higher, probably 700 or so. So if you do want to be a part of that, there's nothing wrong with that. As far as a stop goes, there's a few things that you can look at. Remember, this was our bar to get long off here. One, you can keep it right under these swing lows around 655, 666, 656, which is only a little more than 1% from current prices. If I recall, we bought just a little bit higher than this. But wait and see, and see what the beginning of this week gives you. What I'd be looking for is some type of resolution to this little pattern here. The point of control for the month will be coming up to 665, that shows you that value's migrating higher. And as long as we're in an uptrend, this should take another test for new highs. And if it doesn't, we'll find out fairly shortly. We could easily see 640 or so on Apple. However, given, Apple gets volatile when it makes new highs. So let it do what it's going to do, but realize that the trend is still up. All right, Bristol Myers. This is a name that I actually got out of. Most of it, I'm still holding some short put spreads that are acting in my favor, and also a decent amount of shares. However, I got out of more than half of those on both the 23rd and the 24th. So what the plan was, we bought the dip. Actually, on the original position, I got stopped out at a break even on the 17th, and I got right back in on the 22nd, rode it higher for 2 days. I like to close out positions on Friday or reduce my exposure. That's what I did. We basically went from this high volume area up to this one. So far, we're holding it. We want to remember, we're coming from a downtrend. We gapped lower. So, of course, we could see a retracement, but I'm really looking at this point of control back in May. It's also the point of control for the last 90 days. I'm kind of considering that a ceiling right now. I'm actually short 33 puts. So into any more strength, I'll probably get rid of the put. Well, I will get rid of the put spreads for a decent profit. I collected over $1.20, I think, in premium. I don't know the exact number. I know it's over $1 though, and collected over $1 in premium. And about half of that, I think, is taken out of my short put. So I'm definitely at a break even there, worst case. And then my shares are up almost $1 now. So not too bad. One thing that may be worth considering if you were looking for a little longer term, see what the premiums are on like the 33 strike or the 34 strike call options, and sell calls against every 100 shares you own. But however, this is just a snapback trade. This is easy money, especially on a name like Bristol Myers. If you choose to hold for a longer term, that's fine too. That's your deal. I'm more short term, so I'm going to be ditching positions sooner, looking to get in and out of things within a week or two versus people who hold for a couple months, maybe even a year or so. All right, before I get into some commodities and currencies, Deere, this was brought up on Friday, came back to the buying area that you looked to be a buyer, and I think that you got your buying opportunity on Friday. We may have another shot at it on Monday, but what I'm looking at is ultimately we have consecutive lows here, and we have consecutive highs. We are having an inside month relative to last month's, and we are holding this point of control level both from last month and this month. The volume on these two buying bars were below average, but you have to take in account how big this volume was and how much of a deviation it made, and you're not seeing the full effect of that. So back here, average volume was around was 500,000 for every hour, and you definitely 500,000, and you definitely got that 4 bars over the course of the last 2 days. So basically what you do is you can either have your stop right under this month's point of control. If you want to have a little bit of a looser stop, you have it under this month's low, but you kind of let it do its thing. If the market wants to continue higher, then I look at this as a longer term potential base and a breakout pattern. You'd be looking for, basically 84 or so on the upside, basically value area high for the year, and then this high volume area up towards 87, up to around 88. Those are your longer term upside targets, but you want to get in at good levels and then simply use the trailing stop or, slowly raise your stop however you want. But remember, the ultimate goal, get your stop to break even, and then, all of a sudden you have no risk in the trade, and it becomes a lot easier to stay involved. Just kind of move that stop up as price continues to appreciate. That stop that set stop, the ATR stop, is there to kind of give you a reference as far as, where to place your stop, average true range sort of thing. So just be aware of that. Okay, silver. This was just a good breakout. I actually missed this silver trade, but I caught the gold one, so I'm okay with this. But basically, we had a consolidation where, and I guess you could connect these if you wanted to. Let's go even a little bit further out. This has been almost... So look, you have a long-term resistance trend line. We break out from those levels on good volume. This is a name, and now that I zoom out to the 2-year chart, this is looking extremely bullish, and this is looking like something that you just want to go out and buy. However, I think on any weakness, really, and I didn't realize this on a 2-year chart. You buy the weakness on silver. In fact, this may be a situation where you can go out tomorrow and buy like a fourth or a fifth of a position in silver just to get involved if you aren't already. Let me get to it, stupid. All right, get involved if you aren't already. Realize there's going to be a little resistance at 32, but the way that was looking, yeah, this looks good. This is what you want to be a part of, and we want to ride this higher. The best way to use it is SLV probably. Silver futures, unless if you're trading big, there's a lot of leverage there and it can whip you around. Similarly, gold breaking out, trend line. Let's zoom out again, see what it's looking like on a 2-year. I mean, look at this. This is your long-term base that you're talking about. Low. Let me zoom in a little bit. Low, 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 higher lows. You got a little consolidation pattern. Bam, a squeeze out the top. We're at the top of this high volume area here. What we ultimately want to see is this to go straight up to 1700 or so. If 1700, anything above that is okay. On solid volume, that shows you that this is a breakout. This is something that you can look to go higher. Guess what? We're already long this. I've covered this for the last 2 weeks, I feel like, as far as, really starting to get bullish. And the reason why, we were getting, basically a flat top, higher lows. Let's look at the hourly chart, the monthly profile, see what's really going on. Basically, last month, yes, July, that high volume area. What happened in August? We traded off of those levels. August starts. We retest this high volume area where the majority of the volume happened in July. We bounce off those levels. We fail. We bounce off those levels. Then all of a sudden, this is when I recommended getting long. We are at basically an apex on this triangle. We also have the point of control for the last 90 days here. The point of control for the month of August, which is almost done here. And all of a sudden, we get a confirmation, a breakout on solid buying volume. This is the stuff that you want to be a part of. So what I was just long GLD. I increased my GLD exposure, got paid off. Guess what? Now I'm looking for even more upside on gold. As far as, another $30, basically $1,700. Can we push $1,700? And, the answer obviously remains, or we still don't know, obviously. But the way it's looking, sure. What we do, we bought the, hold on, let me find out. The 164 by 167 call spread in GLD expiring in September. So, September, right? Yes. So these were for 83 cents each, so you're looking for about a 4-to-1 payout. Basically, we're saying GLD, this level, we're breaking out of this base. This level is going to be maybe short-term resistance, a balancing phase, 3 or 4 days, something like that in this range. But eventually, at some point in the next 30 days to September expiration, we're going to see some type of rally up to 167 on GLD. When we get that, you take profits into strength. Okay, that's the trade we got in Friday. I think the trade's at a slight profit. I'm not really sure. It's nothing crazy, so it's not like you missed the trade. You can always adjust it if you don't like those strikes. Those are the strikes I chose because I thought it was a fair risk-reward ratio for the kind of move that we're looking for on GLD, on gold. All right, dollar bouncing where you should expect it to bounce. Drew this line last week. Holding so far, light volume, three heavy selling days, and bounce, but on light volume. What's happening here? The dollar is topping out. You got a major, basically a double top here, especially after you see this, and then a lower high, huge down bar. Looks like it can't even retrace half of it. And then you get confirmation selling. Let's show you on the hourly chart so you can really see how this works, okay? Here we are, zooming in. What are we consistently having before this? You can see back here, looks like this was April. Point of control for April down here. Point of control for May up here. June, July, all migrating higher, the point of controls. Then all of a sudden, the point of control for August is lower than July. We're seeing some type of retracement, some type of difference. What happened in the beginning of August? Price on the dollar rallies up to last month's point of control. Huge sell-off. This high volume area here from July, right here, this high volume area, guess what happens? Oh, wow, that's weird. Resistance. Why? Why is this resistance? Because you have all of these buyers on the dollar that were active, or all these market participants that were active at these levels. So what's going to happen when we retest these levels? You're going to see defending of the positions or positions getting stopped. There's going to be activity there. It's going to show you some type of market top, and that's what we're seeing here. And then you get a trade down to, guess what? The next point of control. We pierced it some on Thursday, bounced back on Friday, but look at the volume. The buying volume is weak. This looks like it wants to take another leg down. Respect it. Don't, anticipate it only if you get the setup. Like, for example, if you were to sell the dollar. But one thing to say, the trade on the dollar, and you could go back 2 weeks. I know I said this, was to sell from these levels, 83, whatever, anywhere around here. Sell it with the target down to 81.50, 81.40. That trade is over. If you want to trail your stop, you're stopping, for example, using the average true range stop, 81.85, let's call it. So you'd be, potentially stopped out, but you would have probably had a limit to cover somewhere around these levels. A great fill, stay involved, but reduce your exposure once your limit or your targets are hit. Excuse me, but it sure looks like the dollar does want to kind of drift lower. This 80-40 level or so on the dollar, this huge high volume area here, sure looks attractive, especially with this 233 moving average, just a bonus. So I wouldn't be surprised if we took another leg lower on the dollar. Similarly, euro, I would, maybe see further price appreciation on the euro. We're getting a little bit of resistance off this little high volume area from the month of July. And let's see, 2 months ago, June's point of control was a little bit of resistance, broke out, now a little bit of support. Still pretty good buying, so let's watch that level. 125, even number, that's weird. 126 up here, that's weird. Even numbers seem to work out on the euro. That's just kind of how currencies trade. So, I would stay away from the euro as far as a long position. There are other options. If the euro is going higher, then equities are probably moving higher, and that'll give you opportunities in other names. So let's be aware of that. Oil, I think you can look for potential short on the oil here. Back up to this huge high volume area, big retracement, great turnaround. Look, I guess we'll go through the steps. We'll look at what happens here. All right, high volume area from the month of June. What happens in July? We move above it. We test it. We test the point of control almost to a penny. 83, 83, hold on, 83.46. The low here, 83.65. So less than 20 cents off. We move up. What happens from July to August? In August, we test the bottom of this high volume area, the point of control. We hold it. We move up. What's happening now? We expanded past this month's point of control, and you have to be aware of this situation. Let me get rid of these lines. Okay, the high volume area for this month, the 94.20 down to 92.82. Price is probably going to test that on oil, or it's at least going to, 95.60 or so. Look for buyers to hold it. But I want to point out this point of control for the month of May back here. There was no volume that covered it. See how from June to July, price came back and tested the point of control, the high volume area here. Even from July to August, price tested, August tested July's high volume area. In April, we didn't get that the following month. We kept going lower. So the retracement on the way back, this is a huge target here. And this is where you look for some major sellers. And then so what? You zoom in. What's going on? Oh, an entry bar, major selling. So if you wanted to take a shot to the short side, here's your double top, and here is your volume sell bars. That's kind of what you're looking for here, and you look to take advantage of that kind of situation. On USO, which probably would be the way you play it, same thing. I almost initiated a short position in this. I did get scared. I just chose not to. On Friday, on USO, into the strength. But the target would be down to this point of control for the month. Just kind of fading the move. Maybe it works, maybe it doesn't. But as you can see now, we have a lower high, a lower low. So you can see the bar to enter was, it's frustrating because this wasn't a very good sell bar. I'm just going to say we'll just go with that was disqualified. And we'll leave it at that. However, I wouldn't be surprised for oil to retrace a little bit, or at least hold 95.50 or so, 95.60. So really, that's it. I would expect, just be mindful, realize that the market can still appreciate in value. It's in an uptrend right now, and we should continue to see higher prices. Be patient. Let the opportunities come to you, like we got in gold. We finally got the opportunity in gold. We got paid off big time, and we're looking for a little more upside where we will scale out of the position some. Still keep a longer term horizon on a position like gold, at least from my standpoint. But realize the short term trend is to the upside on gold, and especially those who are trying to press gold to the short side, in my opinion, stupidly. They're getting squeezed right now. Longs are getting longer. That's what you want to see. So anyways, take care. Have a good rest of your night, and I will talk to you tomorrow.